No, 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 no! This cannot be real!
What happened? Why are you shouting like this?
Amir, your car picture is everywhere in WhatsApp group.
I hit someone's car and shot behind it, and the glass shattered.
Oh my god, that's like 3 losses at once.
So, one accident, many damages. Interesting.
Yeah, but alright. Okay, now please everyone stay calm, alright? Actually, no, please do not stay calm, because I am not calm.
Stop panicking, Amir. By the way, do you have motor insurance or not?
Yeah, I do have motor insurance, but what if it's not enough? The repair cost alone is over 200,000 ringgit.
Wait, if one accident that causes so many losses, who actually pays?
Well, this is exactly where general insurance matters.
That's Takaful. General insurance is non-life insurance. It protects people and business from unexpected financial loss. Unlike life insurance, general insurance is usually short-term, normally 1 year, and must be renewed. Example include motor insurance, fire insurance, medical insurance, and liability insurance.
Huh? Liability insurance?
For your information, liability insurance covers compensation when a person or business is legally responsible for harming others, such as customer injury or property damage.
Well, from a tax perspective, general insurance is treated as a separate business source because its risks, cash flows, and claim patterns are very different from normal business. This is why special tax rules exist.
So, general insurance is like paying first, panic later.
But why does one accident affect so many people? Like Amir, the shop owner, and the other driver.
Exactly. I didn't just damage one thing, I triggered a chain reaction.
And that is why general insurance is important, not only socially but also economically. General insurance protects society from financial shock. For individuals, it prevents sudden bankruptcy. For businesses, it allows operation without fear of total collapse. For the government perspective, insurance supports economic stability. Without general insurance, one accident could destroy lives, businesses, and confidence. And from taxation, insurance involves large upfront premiums, uncertain claims, and also reserves. That's why normal business tax rules cannot be applied directly.
So, how does the government tax all of this?
Please, no tax. I'm already confused here.
This is where the things becomes clear. In Malaysia, general insurance is taxed under Section 60 of the Income Tax Act 1967. This section requires insurer to compute adjusted income separately for general insurance for business because it involves high risk, large premium, and uncertain claims. Taxable income mainly comes from underwriting results, which are premium earned minus claim incurred and change in reserve, and also investment income such as interest and dividend.
Wait, but in under businesses, we always use sections 4A for business income, right? And expenses are deducted under section 33. So why can't we just apply the same rules to general insurance? Why does this insurance need its own section?
It's alright, let me tell you. Section 4A applies to normal business income, where income and expenses are predictable. Section 33 allows deduction for expenses that are wholly and exclusively incurred in producing the income. But general insurance is different. Insurance companies receive premiums before they know how much claims will happen. They must set aside reserves for future claims, which normal businesses do not have. That's why Section 60 of the Income Tax Act 1967 exists, to replace the normal Section 4A and Section 33 approach. In short, normal businesses use Section 4A and 33, but general insurance uses Section 60 because its income is uncertain and risk-based.
Alright, okay, now I get it. But wait, I paid service tax on my insurance premium, right?
Yes, my motor insurance receipt also shows a service tax.
Yes, correct. Most general insurance premiums are subject to service tax at 8%, such as motor and fire insurance. This contributes to national revenue. However, medical insurance is treated differently. Like medical insurance premiums qualify for personal tax relief, which was increased to 4,000 ringgit under Budget 2025. So, taxation here is not only about collecting revenue, but also about providing protection and relief to individuals.
So tax is not just about money, it's about control and protection.
Oh, by the way, listen carefully. This is why general insurance matters. There was an article by Mail that reported lorry accidents claimed 1,457 lives in just 6 years. And most of these deaths happen on highways. That's not just a statistic. That's families, that's income loss, that's medical bills, car damage, legal claims, everything at once. Now, imagine this. If accident like this happen without proper general insurance, who pays? The driver? The victim? The business owner? That's why motor insurance, liability insurance and personal accident coverage exists. General insurance is not for when life is perfect. It's for when things go wrong suddenly. So yeah, with real accident happening every day, what are you guys waiting for? I didn't know that insurance and tax are actually connected.
Yeah, because before I started general insurance, I did not realize that insurance income is not treated as like normal business income. I found it challenging to understand why premium are taxed differently and how the insurance affects taxable income.
Yeah, that's correct. Through this topic, I learned that taxation must reflect business risk and cash flow reality, not just accounting profit. As a future professional, understanding why tax rule exists is critical.
Yeah, this experience also improved my analytical thinking and made me more confident in interpreting the special tax provision, such as Section 60 of the Income Tax Act 1967.
Yeah, also, I learned that the tax law can also protect the society, which is we don't see it clearly. So, this changed my view of the taxation.
This assignment proves that taxation supports stability, not just government revenue. It prepares us for a real professional responsibility. I now understand the importance of continuous learning in taxation due to industry-specific rules.
Guys, I've got some problems. My cousin, he passed away last month. He had insurance, but the family, they are arguing.
Arguing? About what?
Some say the insurance money involves interest, the others say it's not halal.
This is what happens when people don't understand how insurance works.
This is where Takaful comes in, right?
Well, exactly. Alright, let's pause here. So, both conventional insurance and Takaful aim to protect people from financial loss. But they are structured differently, and that affects how income is treated and be taxed. So, in conventional insurance, policyholder transfer risk to the insurance company. The premium paid becomes income of the insurer. The company pays claims, earns investment income, and any profit belongs to shareholders. Because the income belongs to the company, it is taxed as an insurance business under Section 60 of the Income Tax Act 1967. In Takaful, participants do not transfer risk. They share risk through contributions called tabarruk. These contributions go into a participant's fund, which is held in trust. The Takaful operator does not own this fund, so the key difference is ownership of money. And this ownership difference is why tax treatment is different.
So, if the operator doesn't own the fund, how are they even taxed?
Yeah, what income does the company actually have?
So, this is where the law of tax steps in.
Bro, it's lunchtime. Fine. So, from LHDN's perspective, Takaful operators are taxed under Section 60AA. This section exists because Takaful income is not the same as normal business income. The operator is taxed only on income that truly belongs to the company, such as wakalah fees, mudarabah profits share, and income from shareholders' fund. These belong to the operator, so they are taxable. But the participants' fund does not belong to the operator. Tabarruk contributions are pooled to help participants, not to generate company profits. So, any investment income earned within the participants' fund is not taxed at the operator level.
This is the reason why special tax rules exist, because Takaful separates ownership between the operator and participants. That's why normal Section 4A business rules cannot apply. And that's exactly why Section 60AA exists, to tax only what truly belongs to the operator.
Okay, so tax makes sense for the company, but how does this affect us?
Yeah, what about individuals?
So here's something interesting. This is the key part for individuals. For family Takaful, LHDN treats it the same as life insurance. That means you can claim individual tax relief up to Rm3,000. But for general Takaful, car, house, and businesses, there is no personal tax relief. So if you don't understand this, you might have to cancel the wrong protection or miss out on the real tax benefits. Oh, by the way, listen carefully. This is why Takaful regulation really matters. Lately, many people are worried because medical Takaful contributions are going up, and this is called repricing. But Bank Negara Malaysia has stepped in with interim measures to protect us. So the first one is the 10% cap. For the majority of participants, any increase is capped at below 10%. The second one, 3 years phase. Price changes must be spread out over 3 years until the end of 2026. And the third one, senior support. For those 60 years and above on a basic plans, the price hike is paused for 1 year. So now imagine this. If Takaful costs skyrocketed by 40% overnight without these rules, who pays? The retiree on a fixed budget, the patient in the middle of hospital stay, the family trying to save for the children. So Takaful is not for when life is perfect, but it's for when things go wrong and you need a community that has your back.
So Takaful is not just halal insurance.
Yes, because before this assignment, honestly, I thought that Takaful was just different terms for insurance. But now, I realized that the way it is structured changed how it's taxed.
As I learn more, I realize that taxation must respect the value behind Takaful. This topic changed how I see the tax law, not as memorization, but as something that protects fairness.
At first, I struggled to understand why the Takaful operator does not fully own the fund, and that confusion made the topic quite challenging for me.
And yeah, in my opinion, back then I thought the Takaful was only about the religion. But now, I understand its structure and the tax treatment and also the economic rule of Takaful.
Yeah, by going deeply into this, it pushed me to think more carefully, and it reminded me to continuous learning is essential if I want to be responsible tax professional. And that's why understanding tax is a professional power to me.